It's the weekend and we are back with your one-stop show on corporates and startups world updates. Companynama. I am Ajay and over to this week's updates from the corporate world. We first start with something big, and speaking of big, Reliance Industries is calling a meeting of its shareholders and creditors on May 2 to consider demerging and listing its financial operations. The listing will be called as Jio Financial Services. Now, what this listing means is that existing shareholders of Reliance Industries will get one share in Jio Financial Services against the one held in RIL. This new listed entity will include Reliance Payment Solutions, Jio Payments Bank and Reliance Retail Finance among others. The demerger was first approved by the RIL board in October 2022 with KV Kamath proposed as the chairman. Moving on now, we go on to another big giant from the FMCG sector. Nestle, the world's biggest food group, is among the final bidders competing to acquire India's Capital Foods. The Swiss company has been discussing terms of a potential deal for Mumbai-based Capital Foods, according to reports. Any transaction may value the Indian firm at more than $1 billion. Capital Foods makes the Ching's secret brand of spicy noodles and fusion chutneys infused with the so-called Desi Chinese flavors. It also sells Smith & Jones cooking pastas and masala mixes. Now then, before we take leave from the FMCG sector, let's pay a quick visit to another big FMCG conglomerate in ITC. Sanjeev Puri, chairman and managing director of ITC, said that the company is planning to invest 3,000 crore rupees annually for the next few years for building new capacities and speeding up growth. Puri expects the FMCG business to bounce back soon after 3 years of COVID-induced slowdown. The company is also embarking on a new structure for the hospitality business, and a decision could be taken in the next couple of quarters. From getting hospitalities, we go on to hospitals. Manipal Health Enterprises has acquired Kolkata-based Amri Hospitals in a deal worth 2,400 crore rupees. Manipal will pay about 75% of the transaction upfront and the remaining will be paid after a year. Adding to that, all the cases against Amri promoter Imami Group have been withdrawn. The buyout will add another 1,200 beds to the Manipal Group's hospital portfolio, taking its total number to about 9,500 beds. Up next from the hospital, we move on to Piramal. Well, let's find out what news has made headlines. Billionaire Ajay Piramal and TPG Inc. are considering selling their stakes in Shriram Holdings, that is Shriram General Insurance Holdings. Piramal holds 20% and TPG holds 9.5% stake in the insurance company. The trigger for the exit could be the merger of three Shriram Capital, Shriram City Union Finance and Shriram Transport Finance, creating Shriram Finance. According to reports, Shriram General Insurance could be valued at $2 billion. Well, it's time to leave Piramal and move on to our next news. And now it's time to visit the mines. Vedanta Limited board has approved an interim dividend of 7,621 crore rupees or 20.5 rupees per equity share for 2022-23. The payout is expected to help its parent Vedanta Resources to meet its debt obligations. The total dividend payout during 2022-23 now amounts to about 37,700 crore rupees. The group is in talks with banks to raise $1 billion as a loan from international banks and has sought RBI permission for this. The board also accepted the resignation of its CEO Ajay Goyal. Meanwhile, ratings agency CRISIL has cut Vedanta's rating to negative. From the mines of Vedanta, we take a pit stop at the companies of Adani Group. The Adani Group is betting on 20% annual growth in the next few years to pay back all the loans. The group said it has paid off all of the $2.15 billion US loans taken pledging their shares in the conglomerate, and only debt at the operating company level remains. To buttress its claims, the Adani Group came out with the status of its pledged shares. After the Hindenburg report controversy, the group may pull back from petrochemicals and is unlikely to go ahead with the planned $4 billion greenfield project that is set to happen in Mundra. Instead, it will focus on its core areas like power, ports and green energy, And on the job front, the staff at ACC and Ambuja Cement are looking for new opportunities as a group has moved significant roles to Ahmedabad. It's time to leave the corporate updates, but before that, let's cover up with some protection. Health insurance third-party administrator Medi-Assist Healthcare Services Limited has bought Raksha Health Insurance TPA for an undisclosed amount. This is the largest deal in the TPA field till date. According to the Economic Times, Medi-Assist CEO Satish Gidugu said the Raksha acquisition will add 35% more to its premiums. After the buyout, the company plans to reach out to more Tier 2 and 3 cities. This is Medi-Assist's second acquisition in India in the last 6 months. It had earlier bought UK's Mayfair We Care last year. And now over to the segment that talks about major corporate controversies and disputes. Quite a few biggies are on the radar this week. Which were those? Let's find out. We begin with something that is used to find out anything from anywhere and at any time. The NCLAT on Wednesday upheld the order of the Fair Trade Regulator CCI imposing a penalty of 1,338 crore rupees on internet giant Google. Google was directed by the appellate body to pay the amount in 30 days. It also rejected Google's plea that there was a violation of natural justice by the Competition Commission of India. After the ruling, Google said it is evaluating the judgment. Meanwhile, some executives in Indian startups have said Google may find loopholes to skirt the payment or fine. It's time to drop by a big PSU bank. Which bank is that? Well, here it is. The Reserve Bank of India has told the Supreme Court that State Bank of India may not have invested in Yes Bank if the AT1 bonds were not written off, according to the Economic Times. In January, the Bombay High Court had set aside the decision of writing off SATs or rupee AT1 bonds of Yes Bank. According to RBI, if the bonds were not written off, it would have shrunk bank's capital base and impacted capability to lend. From a PSU bank, we skip a beat to the Life Insurance Corporation of India, LIC. The country's largest investor plans to invest a record 2.44 lakh crore rupees across markets, including in shares of locally traded companies in the year starting 1st April. According to reports, LIC has decided to cap its investments in individual companies. As of now, LIC has not invested over 10% in equity or debt in any company. LIC has been in the limelight lately due to its investment in Adani Group. Mirroring this, the company's stock hit an all-time low of 530.05 rupees on March 27. And now from the age-old bank and insurance behemoth, we move on to the new age, or better, the new generation. Financial technology company Paytm has received an extension from RBI to apply for a payment aggregator license in 15 days. Till such time, Paytm can continue with the online payment aggregation business for its existing partners without taking on any new merchants. In November, RBI had declined a payment aggregator license for 197 Communications Unit that owns the popular Paytm brand. The company said that the latest move has no material impact on its business and revenue, and for the offline part of the business, it can continue to take on new merchants. It's time to take a quick break and go to the offices of SEBI and catch up with somebody that can tickle your funny bone. The Securities Appellate Tribunal has set aside a SEBI order of March 2 to ban actor Arshad Varsi and his wife Maria Goretti from the securities market. Varsi and Goretti were banned for recommending Sadhana Broadcast's shares through YouTube channel. But SAT restrained the couple for dealing in shares of Sadhana Broadcast till the investigation is completed. SAT noted that there is no evidence to show that the Varsis were involved in the making, distribution, promotion and uploading of the videos on YouTube channels. And from comedy, we move on to the tragic saga of Reliance Capital. Lenders of debt-ridden Reliance Capital have decided to go for a second auction on April 4 in their bid to maximize recovery. IndusInd International Holdings Limited of Hinduja Group on Monday told the committee of creditors it will retain the earlier bid of 9,000 crore rupees upfront in cash. The COC decided to set the base bid at 9,500 crore rupees on a net present value basis with a minimum cash component of 8,000 crore rupees. Earlier, the Supreme Court disallowed the plea by Torrent Investments to quash the second auction. Well, that were all the updates from the corporate world. Now, let's take a look at what went on in the startup world this week. We first take our smartphone and open Phonepe as it calls off deal with Zest Digital Payments. Phonepe is pulling out of its deal with Zest Money over due diligence concern in Buy Now Pay Later platform. This is a big blow to Zest as funding has become scarce world over. Questions over the sustainability of Zest's business in India and Singapore may have also led to the collapse of the deal. It's time now to exit Phonepe and open Unacademy in your phone. The EdTech company has carried out yet another round of layoffs, cutting about 12% of its workforce or 380 employees as the online coaching platform continues to strive for profitability. Speaking on this, CEO Gaurav Manjal said, and I quote, "We have taken every step to make our core business profitable, yet it's not enough. This is the fourth round of layoffs for the company in the last 12 months. It had cut 600 employees in April 2022, 350 in November last year, alongside other layoffs at its core business and unit re-level. Other edtechs such as Frontrow, Byju's and Vedantu have laid off staff over the past year as cost-cutting measure. Right then, it's time to take a holiday, and holiday means certainly budget hotels, and budget hotels means Oyo. Oyo Hotels is going to reduce its size of its IPO by about 2/3 as the valuations of the company plunged. The company is preparing to file a fresh IPO document soon. The earlier filing was based on funding requirement of that time. During a town hall meeting, Oyo founder Ritesh Agarwal is reported to have said that the company holds 2,700 crore rupees cash in its books with little scope of utilizing it. We check out of Oyo, and before we ride into the night, let's do some summer shopping at Mamaearth. Indian skincare startup Mamaearth is reported to have put its IPO on hold because of weak market conditions. Mamaearth parent Honasa Consumer filed the documents on IPO in December, planning to raise about 2,500 crore rupees at a valuation of about 25,000 crore rupees. The fundraise was to be through issue of new shares and offer for sale by existing investors. The company is backed by Sequoia Capital and Belgium's Sofina and is now in wait and watch mode before going for the IPO. Well, that's it for this week here on Companynama. Do check out our weekend shows like Reality Check and Spendwise on the Money9 app and on the Money9 English's YouTube channel. This is me, Ajay, signing off. Take care, happy weekend or whatever that's left, and good night.